Welcome back to our next guest who's ready to talk about the Fed and more. Ted Thatcher, President, Bright Lake Wealth Management, is with us. We were just talking about credit spreads and how people may react to what the Fed may or may not do. Do you think that we're going to be getting more from the Fed? Should we get more? Are they more focused on inflation or labor at this point?
Yeah, Nicole, in terms of what the Fed is really focused on at this point, it's clear Powell is really looking at the labor market. They're much more concerned about the downsides when it comes to the labor market, I think, as we turn the corner into 2026. Powell actually cited at their meeting the week before last that the PCE number, kind of still being a little sticky, had a lot actually to do with tariffs, in his opinion. And so I think that that's actually a positive story for consumers when you look at the rest of the economic data, because I don't believe at this point that the tariffs are going to continue to be a big problem in the economy. Sure, they could rear their head a little bit here or there. But what my eyes have really been on is the GDP expectation, the GDP print that we got this morning for Q3, 100 basis points above that expected 3.3% number, of course, coming in at 4.3%. When you pair that with the short, year over year inflation CPI print at 2.7, below the 3.1 that was expected, when you look at what policymakers updated expectations to for 2026 as it pertains to GDP growth, moving it up from 1.8% to 2.3. And of course, also finally, lowering inflation expectations as well for 2026, it shows me that there are real signs of resilience in the economy right now. Might not be perfect, but there are nice signs of resilience.
The only thing about that was that, and maybe it was a blip, the government shutdown, but that number, that 4.3%, is delayed. It was, in fact, as you noted, a big gain, the biggest that we saw in 2 years, but it was before the government shutdown. So are you worried that the numbers could be different once we get new numbers?
I think that we've all been flying a little bit blind because of the government shutdown. Do I think there could be revisions? I think it would be, silly to say that we won't get any revisions at all. But I do believe that that is a reasonable number. And just because the government was shut down, I don't think that that's going to blow a hole in the economy or economic picture for next year. I don't believe that policymakers would have updated those expectations if they thought it was going to be an entirely different story. I don't think we're going to go from an expected 3.3 to 4.3 and then back down below that or anything of that measure. That, however, does not alleviate entirely the discussion that has been had around the labor market. Like I said, it's not a perfect economy right now. I just think that when we see all these different data points, what I'm looking at the end of the day are the fundamentals here. If we are seeing growth in the economy, if we are seeing real relief for consumers around inflation, that is a real positive thing. Of course, the whole story for the last several years has been how the consumer has been impacted by inflation.
Yeah, and what do you tell investors now? Because obviously you think that they're maybe a little more worried about labor. I mean, investors have been spending. Consumers are spending, I should say. We saw that, with Visa over 4%, MasterCard said 3.9%. The one concern, though, is I did see that household debt of $18.6 trillion right now going into 2026 was an all-time high. That made me a little nervous.
Sure. Yeah, so there's two parts to that. What do we tell investors and how do we think about the consumer?
Yeah.
The consumer, I think, is a multiple step process. Do we need growth in the economy to actually help the consumer? Because I don't think we are actually going to get this disinflation that a lot of us would prefer. We would all love to go back to the way things were priced a couple of years ago. I don't think that's practical. The first step is really getting to that 2% target, which we are seeing trends towards with inflation. Then growing the economy and, of course, growing earnings for consumers. I think that the story is there for that, which pairs into, of course, what we think about when it comes to investors and where we look for growth in 2026. On the growth side specifically, I really believe that there's a growth story to be had within the AI discussion. There's been a lot of questions about what is going to happen with AI in terms of, is this a bubble or not? I think really what it is, though, is it's actually the market simply shifting its focus. So the market has been focused on what? It's been focused on CapEx investment and, all the money that's gone into building out these data centers. I think that story is tired. However, I think the focus now shifts to two things. Of course, how do we get ROI, the monetary impact of AI out of the investment that's been made? But before we get there, I think the market, before it completely fixates on that, wants to see the user growth. Think about all the metrics that get tracked when it comes to the social media companies. We want to see user growth. We want to see hours on the platform. We want to see active users. And so distribution for these companies becomes absolutely front and center. And then, of course, the monetary story behind them.
What do you think is going to be the story of 2026? Because right now, pretty much we see the resiliency of this market. Everything was thrown at this market this year, and yet we still are finishing with gains. And, we're about 13 points away from all-time highs on the S&P. What do you think we're going to be saying about the markets next year?
The way I look at this, Nicole, is that it has to come down to fundamentals. We've been talking about the consumer, but, and the fundamentals that drive the consumer's experience. I do think there's some more highlights there. The consumer sentiment and consumer confidence numbers both did come in a little bit above expectations, which is nice. But when it comes to 2026 and what to expect in the markets, it also is going to come back to fundamentals. We've seen a story where, the non-mega cap companies have actually had really good, fundamental earnings. And so I believe that is what will drive the story of the markets in 2026. On the upper end growth side, I think that there is still a discussion that has to be had around the new focus that the market will place on different aspects of the AI economy. And beyond that, it will come down to the fundamental earnings that we see.
Yeah, understood. Just quickly, you talk about policy risk easing and growth holding up. What about, Google, Meta, Costco, and the cash flow, the balance sheet? What's the correlation here, and what are your thoughts there? What should people be watching? Are these good investments, let's say, too?
Yeah, absolutely. Alphabet is just a story that I've been very impressed with. What I like about it is it pairs kind of with the conversation I was saying earlier about the AI story. Google, their tech stack, the entire stack of what they have the TPUs, they have the hardware. They're not beholden to the NVIDIA chips like so many of their competitors. They have, of course, a premier performant model in Gemini 3. And I would say perhaps most importantly, as we look at what will happen with Alphabet in 2026, they have an incredible user base, 230 million paid subscribers on Google One services. They're going to put Gemini right in the front of all of those users. And so they will be able to take advantage of the full stack that they have, and most importantly, the distribution that they have. And then to your point about Meta, I think that what I like about Meta, of course, it's kind of been beaten up a little bit in the AI discussion. But what I think is maybe not looked at as much yet is Facebook's ability to actually monetize on AI quickly. At the end of the day, Facebook's an advertising platform. And so they've already been able to use AI to better target their ads, get higher CPMs and these types of things. They've already made up for all of the privacy walls that Apple has, put in front of them. And in 2026, I think the story for Meta is going to be how they not only target well with AI, but actually help advertisers, small businesses and large advertisers create ads using AI, on their platform.
And, I was looking quarter to date, Google is up 27%, Amazon's up 4%, but Meta and Microsoft are both down for this fourth quarter. Okay, good to see you. Ted Thatcher, President, Bright Lake Wealth Management. Thanks for joining us here on the show.